Ever fear the IRS is gonna kick your door down because you didn't report your crypto taxes properly? Just me? Well, in this episode, we answer the top 9 crypto tax questions people are searching for online, and they are answered by an expert crypto CPA who lives in this world. Today, I'm joined by Lorenzo At Bitcoin, the guy behind LorenzoTax.com. He helps crypto investors clean up their mess, pay less, and stay out of trouble. Whether you're staking, flipping NFTs, mining, or just sitting with a big old bag of Bitcoin, this video could save you millions of real dollars and keep the IRS out of your dreams. If you're ready to stop hoping and guessing and learn expert answers to the top 9 questions people are too afraid to ask about crypto and taxes, be sure to smash that like because it really helps get this video seen by more people. And if you want to catch more videos like this, subscribe to the channel, baby. Michael Anthony TV, be sure your notifications are turned on. Now, let's hop in this video. So is crypto actually taxable, and what counts as a taxable event?
Crypto is actually taxable, as I know it's unfortunate to say. And there's several ways where you're creating a taxable event. So one that a lot of people don't realize is a swap. So if you're going from, let's say, Ethereum to a meme coin, or Bitcoin to a different coin, that's a taxable event. The one that people are starting to see more today versus the past is buying goods and services. So let's say I bought Bitcoin and I have a $0 cost basis, or $1 cost basis. Now we're at 100 grand, right? And you want to buy accounting services, pay for Bitcoin, you will create a key when sending us a fee. So let's say we pay $5,000 for a crypto job and your basis is $1. You're going to have a $5,000 gain paying for your services at Bitcoin, which is unfortunate in a lot of ways. So that's why we always suggest.
And that's 20, like when you say $5,000 gain, is it just a gain, or is there like capital gains where you pay an extra $1,000?
Short-term or long-term. So it depends on how long you held the asset.
Well, if it was $1 to 100,000,
Probably long.
it's long-term.
Yeah.
And we'll assume that one.
Yeah.
Okay, so it would be like an extra $1,000 that they'd actually need to kind of pull out like 6 grand or have $1,000 on the side, something like, if they don't hire an expert like you.
That's what we do, is we help with income tax mitigation strategies and managing these gains throughout the year.
Okay. If I don't report my crypto, will the IRS really find out? And what happens if they do?
That's a good question, because not reporting crypto, actually, some people are getting letters from the IRS right now.
Okay.
The people who you're really seeing that are receiving these letters right now are someone who started, let's say, a Coinbase account. Maybe they onboarded $1,000, but they've received, let's say, $1 billion from outside of Coinbase. So they only onboarded a small amount, but received a large amount.
Okay.
So now the IRS says, whoa, what's going on here? Or they're getting this data and they're saying, what's happening? We know you have other stuff out there, so this is your chance to come clean.
Okay, so in this instance, it's like you have a Coinbase account, you put in $10,000 or $1,000 in it, and then into your Coinbase account, there's $1 million more. So now your Coinbase account is $1 million.
Yeah.
Okay. And the IRS is like, hold up.
Money laundering.
Yeah. Money laundering 101. We don't want to do that.
Yeah, but so you're starting to see a lot of that. People they find like centralized exchanges are starting to report data. So if you haven't reported any crypto activity in the past, if you're using a centralized exchange, that's a red flag. It's really easy to see that. So in the past, when exchanges weren't reporting data to the IRS, this wasn't really a problem. The window is starting to close.
Okay.
So it's almost like if you got a W-2 from a job or a 1099 and you didn't report it, one side from the IRS, they see that you made this income, and on your tax return, that income's not reporting. So it's really easy to see just with technology.
Yeah. Who's just matching up.
Just match it up.
It's over here. It's not over here. It didn't disappear.
Very simple.
Yeah. Okay.
Yeah, starting to see that.
And so what happens if somebody, let's say someone's like, oh shit, like, this is me. What do I do?
Yeah, well,
Aside from coming to you or for your team, what would they do?
it depends on the extent, but the IRS does have a voluntary disclosure program that you can actually report all your crypto, but you will only pay penalties and interest on your highest year.
So your 1 year, your high.
1 year. So let's say you didn't report for like 6 years. It may be beneficial to do the voluntary disclosure program, because why pay interest, tax penalties on, tax you're going to hear today, but interest and penalties on 6 years when you can only pay it on 1. It will be the highest year, but you're better off doing 1 year versus 6 years. Yeah. So the IRS does give you this, what we call a get out of jail free card, because you are paying both really up.
But you get out of jail.
You get out of a lot of penalties and charges. But they are being more lenient. They're giving you an option to file this stuff, like with those letters that I was mentioning earlier. If they send you that letter, they're literally giving you the ability, hey, we know you did something here, report it, you're good.
Okay.
I mean, you're still gonna pay, but
So open up the IRS letters.
put on your IRS letters. Don't avoid the IRS.
All right. Number 3. Do I have to pay taxes when I trade one crypto for another, like swapping ETH for Sol? You actually kind of just spoke to that, but it's a question people look for. So
Sure. Well, it is a taxable event. That's why, to expand on it, well, yes, it is a taxable event, but what can we do to track this? That's where we use a crypto tax software to track all these movements, because it's very important to track it.
So, and is that something do you have a proprietary software you use, or one that you recommend for people?
I recommend, no, we don't have a proprietary one. There's a ton of different options out there. We have our favorites. I would say no software is like the end all be all. It will have positives and negatives. So if you're a retail trader, if you're like sub 30,000 transactions, you like using Coinly, coin tracking is another one. We've been working with them for years. They have a great dashboard as like an account. So it's easy for us to see all of our clients. Then we have more institutionalized softwares that are geared more for businesses. Like if you have a P&L to go sync in with QuickBooks, that's a different kind of a software. And then we have a different one, which is a little bit more for like the institutional side. Because let's say you're you got a bot and you do 3 million transactions. A lot of softwares won't ingest all that.
Okay.
So it becomes a little bit harder to work in a job that way.
That's a whole nother level. That's a whole nother level. Okay. So number 4, how is taxation for like staking? Is it any different?
It is a little different. So staking has been a very controversial point in the whole crypto world, because there was a court case a while back where a couple fought it, saying we don't need to report this as income. We only create a taxable event where it's sold. Fortunately, that's not upheld. And I would love a little bit more clarity on this, because the issue is it's considered right now income. So if you get staking income, it is income at the value that you received it that day. Now, the problem is with a lot of DeFi investors, it just all of a sudden the value just drops. So they end up holding the bag where they got to report this income at a high value, and then the value today is very low.
Yeah.
And the issue is staking is considered income, but the loss of the appreciation is a capital loss, and they don't offset. So it's a big issue in the crypto world right now. And that's where I feel like legislation can help
Clarify.
to assist in some of these situations, because the DeFi side of it is really difficult. When it comes to Bitcoin, it has a little more relatively stable, or Ethereum of a more relatively stable price. You're not going to lose 90% essentially overnight. Hopefully, Laura. Yeah. That's where you're in this weird little gray area. Yeah.
Okay. So what I hear is get a tax expert to help navigate through that.
I would suggest that.
Or just don't stake.
If you have a question on it, happy to help out with that. Yeah.
Number 5, do I owe taxes on airdrops or hard forks, even if I didn't ask for them?
Again, another one that's a little bit funky in the crypto world. If you receive that money, it is considered income, unfortunately. It is. I mean, guys don't really win.
Bottom is income.
Well, we've been through 12 audits at this point, and I would say just about every single one of them has gone very well. One of them, the gentleman, was a little bit messy, and they were very strict on these rules. That was income, and there was no way around them.
Okay, you heard it here.
Yeah.
File it, report it, show it.
Yeah.
Pay your part. All right, number 6, if I just buy and hold crypto without selling, do I owe anything?
No. Well, that's unrealized. Just like in stocks, if you just hold something and there's an unrealized gain or loss, it's not a taxable event, so you realize that loss through selling, moving, buying and selling services, or just creating a taxable event.
Okay, perfect. Number 7, what if I get paid in crypto for freelance work? How do I report that?
Honestly, really simple. Just like you're making money in your normal business. If I receive $5,000 for something, that's $5,000 in income. And it's no different than getting fiat.
All right, so just treat it the same as a USD or something like that.
And the best way to even give a part 2 to that is using software, tagging that as daily income. Have your books create. I also use Coinbase Commerce. as a platform to make this like more professional. When you give someone a link to buy something, they could choose what asset they want to use. It could be converted to USDC right away. So if someone pays you $1,000, it's $1,000. It's not 700 or 1,300. You want to have that risk of swinging. Now you can also elect out of that. Okay. And if someone gives you Bitcoin, that you want to have that risk exposure, of having it be going up or down,
especially depending on where it is in the cycle. All right, coming to the close, we got 2 more of the top 9 questions searched for about crypto and taxes. Number 8, are there any good tools that make crypto tax tracking easier, or should I just hire someone? Hire someone.
Well, you can hire myself or any of the crypto service providers. I would always suggest try to, your crypto situation better than anyone. So give it a shot. Coinly, like I said, is one that I feel like is really user friendly. It has a really great UI. Not to give like a shambles plug. It's not like I put a coupon code so maybe you can get something out of it. All right. So there we go. Yeah. They're all, I guess, have their positives and negatives. But definitely use one of the softwares. Do not try and do this on your own. Do it manually. I will not accept a client doing it manually. Let's put that work. Not one. Okay. You were easily in the thousands of jobs. Yep. Crypto calculations between all the team. And not one of them is manual. You have to use a service. It's a non-starter.
Okay.
Yeah.
All right. Start that. I mean, I know for myself, I use you don't track it yourself. Okay. And the last one is, what records do I need to keep in case I get audited, and how far back should I go?
Sure. 3 years is a general audit window. Cut. It can be extended for underreporting, or if there's any sort of fraudulent activity, or you're doing something. So if you're doing something a little wishy-washy, you can extend out of that 3-year window. But generally, that's the time frame. And the type of records that you want, if you want just a list of all your transactions, if you made any manual adjustments, this is where it gets really important, is wire. An audit trail, or an idea what happened to the explanation, is sufficient. It's just like, think about if you had to sit on the opposite side of the desk. If you were in front of an auditor and you had to explain what you've done, how would you do it? Don't make it more complicated than it needs. It's very simple. If you treated something as an expense, what is the expense?
Yeah. Just keep it simple.
Keep it simple. If you had income, okay, what is this income from? If you had to manually adjust something, let's say, you saw an incorrect taxable event and you corrected it. Sometimes what you see a lot of is if you send crypto out, that's not a taxable event if it's going to you. But sometimes on these crypto softwares, because maybe you didn't connect to the opposite side, I created a taxable event. Okay. And that's incorrect. If you adjust it to say, no, this is my wallet,
and you just make a note,
make a little note.
From me to me.
It's from me to me.
I was just moving it from, one account to the other.
Yeah, and you had a hard time connecting that opposite side wallet, or maybe you connected it and it was a duplicate transaction, or there's always a reason.
Yeah.
But having that reason is really important if you're going to get audited, because they're going to go through all that data and they're going to make their own assumptions.
Yeah.
And if there's a difference, you want to be able to explain why.
Okay. Awesome. So guys, Lorenzo here. Now, this is a time for you to brag on yourself a little bit. Off camera, we had a great conversation. I'm just going to say, this guy is the man. So who's your target client, and brag on yourself? How often have you gone through and defended people? What do you find? Talk to people why you're a badass.
I've been in this space since 2016. We've grown with our clients, moved people to Puerto Rico in 2018, and my first kind of tranche made it, just had those excessive gains where they needed to do something. So from there, I started to just get curious, what can people do without having to move to Puerto Rico? Not everyone, Puerto Rico is great, but not everyone wants to live in Puerto Rico. So all right, what other types of tax planning is out there? 2021 was a big year. We had a client become a millionaire. God, it's huge. I mean, with that comes its own set.
Billion with a B.
That comes with its own set of challenges that we had to solve, whether it's estate planning, money management. God forbid he passes away. What happens? What do you do? That's a huge problem that takes
a lot larger.
Yeah, if you die, what's going to happen with your assets? And anyone who has significant money in this space, it's irresponsible to not have a plan. And it's a big problem that not a lot of people talk about. You're starting to see it. So from there, a real focus that we had was on the income tax mitigation side. There's so many things that you could do to save, but the biggest thing is being proactive. If you're ahead of it, there's way more options of being late. So if you made money in 2025, this is the year to get ahead of it. And don't call in December when you're swamped and and no one has the time for it. You do it now.
Who's ever done that?
Yeah, you would, because you can't be late to this. It becomes one, you're rushed, it becomes more expensive, and it's just messy. And like, we don't like that. We like to be very diligent and understand, put a real plan in place, because like money is a very emotional thing. And when you're dealing with a lot of it, people
Get funny.
yeah, they get money, and you want to make people feel comfortable. Let's say they have an attorney that they work with and they want to sign off on it, or they have a CPA. You don't necessarily need to do everyone's taxes. We can plug in at just the crypto piece or just the planning piece. So if we're dealing with multiple parties, we all have to play nice in the sandbox, and it's hard to come up to get a job done when it's rushed.
Yeah.
Like if you come 3 days before the end of the year to run and commit serious dollars to like a tax plan, your attorney's going to be like, no, get the heck out of here. Like, we're not going to do this.
Yeah.
And that's good advice from an attorney, not knowing what's going on.
Yeah.
But if you give them the time to understand what's going on, so I need a plan, that's the proper way of doing this.
Well, I mean, when you're dealing with life transformational wealth and the potential, and I'm going to say that, it's 2025 today. In 10 years, there are people who did not own any crypto, any Bitcoin, and in 10 years, they will be potentially billionaires, clients of yours, because the space has so much more to grow. So don't dismiss like, oh, well, if I in 2016 bought, I'd be in a different situation. It's like, start with the end in mind, get smart people on, and this isn't a paid endorsement or anything like that, but I've just been real knows real, and we've been talking, and Lorenzo, he may look young, but he's battlefield tested. Like,
Someone's been through enough. And if we go to Anna, to like start with the basics you have to have the right data. Data drives decisions, so knowing your numbers is step one. From there, you build on it. So if you have gains, knowing your numbers, okay, how do you save? Like that's how you start to build on your decisions. And like, just to ask, like, some of the other things that we do, we have a list of it. For example, like the crypto books, tax strategy, estate planning, money management, the compliance, OTC services. A lot of times these are ways to move money directly into a bank account. You have a business that wants to take on a little Bitcoin, like setting it up, the structures the right way. These are all, services that we help our clients.
Well, thank you so much, Lorenzo. I appreciate it. Guys, be sure to check out, there will be a link down below if you're interested in getting Lorenzo's tax services. Check it out. Like, he's the real deal. So go for it.
Awesome. Makes that. All right. So appreciate it. Thanks for